Okay, thanks a lot for that. Well, let's go across to Reema now. She's tracking Coforge and the big moves over there. Reema, over to you.
Hi, thanks so much for that. So early in the morning, Coforge saw a very large block deal of nearly 10% equity, which took place at a price of 4,050 roughly, valued at nearly 2,500 crore. What we understand is that Bearings, the promoter of Coforge, is the likely seller in the block deal. Now, with this, if it is Bearings promoter holding comes down from 70%, the peak in September of 2020, now down to 30%. Bearings has been continuously selling stake in the company, and as you can see, in a span of 2.5 years, they've sold down stake from 70 now down to 30%. The previous stake sale had taken place in March of 2022, less than a year ago, at a price of 4,267. So this stake sale has happened at a lower price. Now, the company reported their numbers in the middle of January. It was a good set of numbers. They had gone ahead and raised their full year growth forecast to 20%, 22%. They had seen their highest ever order intake, but the stock is also fairly expensive at 24 times forward multiple. Last week, Nomura initiated coverage on the stock with a buy rating, target price of 5,050. They expect Coforge to outperform the industry in terms of growth rate, so they're penciling in an EPS growth of nearly 25%. But according to them, the risk is of a large stake sale by Bearing. Part of it is played out, but Bearing still has about a 30% stake in the company. And the question is, what will they do? Will they look to sell it down further or keep it at these levels? Back to you.
Okay, all right, Reema, thanks a lot for that. By the way, on the index itself, we've broken 17,750 and we're trading about those levels. If the Nifty needs to bounce, it needs to bounce from these levels. But let's talk about another stock that's getting a hard knock, Lupin. Ekta joins us to tell us more on that. Ekta?
Thanks for that. Well, a couple of key important points from the brokerages with regards to Lupin is that the cost reduction efforts, according to them, were inadequate by the company. The margins have fallen short of the trajectory required to reach around 16 to 17% by FY24 as well. The guidance, in fact, was a reduction of around 500 to 600 odd crores 2 quarters ago, and the company has in fact resulted in a cost escalation of around 200 odd crores. There are concerns over the EBITDA margin guidance of 20% by Q4 of FY24 to FY25. This is without Spiriva generic and inhalation product, which is one of the key products in their portfolio. Spiriva generic, in fact, has been delayed from FY23 to the first half of FY24. The target action date is likely now in April to July. This is depending on a US FDA inspection. Remember that Spiriva generic now becomes the most critical to sustainable growth as well as margin recovery, according to analysts. Incred, for example, is estimating around $75 million of revenue from it in FY24, going up to $120 million by FY27. It could be up over 25% in terms of the core earning estimates by a lot of analysts. Bernstein market performed, target price of 572. According to them, numbers disappointed again. The costs continue to escalate. Incred has said the improvement is below the asking rate. They've maintained a hold. Nirmal Bang has downgraded the stock to sell versus accumulate with a target price of around 655. So there's clearly disappointment really on the cost reduction efforts and the margins for the company. And Spiriva generic is your next port of call for Lupin.
Okay, thanks a lot, Ekta, for that. Let's slip into a quick break on that note. On the other side of the break, our special segment, it's the economy.